Have you ever wondered what really happens when you deposit your hard-earned cash into a bank? Imagine handing over your money, and instead of just keeping it safe, the bank actually becomes richer because of it. This is the reality of modern banking, and it's more fascinating than most people realize. Today, we're going to uncover the secrets behind how banks turn your deposits into billions in profit, and why understanding this process can help you make smarter choices with your own money. Most people believe that when they deposit money into a bank, it simply sits in a vault, waiting for them to withdraw it. This idea is comforting, but it's not quite accurate. In reality, banks don't just store your money, they put it to work. This is where the story of banking gets interesting, and it's the foundation for how banks generate massive profits from everyday deposits like yours. Banks use a system called fractional reserve banking. Instead of keeping all your money in the bank, they only hold onto a small percentage, just enough to cover daily withdrawals. The rest is lent out to other customers. This system allows banks to multiply the impact of your deposit, creating more money in the economy and, of course, more profit for themselves. Let's break it down with an example. Suppose you deposit $1,000 into your savings account. The bank doesn't just keep that money locked away. Instead, it might keep only $100 in reserve and lend out the remaining $900 to someone who needs a car loan or a mortgage. This process happens every day with millions of dollars moving through the system. The person who borrows your money pays interest on their loan, sometimes 8% or more depending on the type of loan and their credit history. This interest is a major source of income for the bank. While your money is out there helping someone buy a car or a house, it's also working hard to earn profit for the bank. Meanwhile, the bank pays you a much lower interest rate on your savings, sometimes as little as 1% or even less. The difference between what the bank earns from borrowers and what it pays you is called the interest spread. This gap is one of the main ways banks make billions every year. The interest spread is the difference between the higher rate banks charge borrowers and the lower rate they pay savers. Even a small spread, multiplied by millions of customers, adds up to huge profits. This simple mechanism is at the heart of banking, quietly generating wealth for financial institutions every single day. But banks don't stop at loans. They have a whole menu of ways to make money from your account. From loan fees and overdraft charges to account maintenance fees, banks have designed a system where almost every service comes with a price tag. These fees may seem small, but across millions of customers, they add up quickly. Credit cards are another major profit center for banks. When you carry a balance on your card, the bank charges high interest rates, sometimes 15% or more. This is one of the most lucrative sources of income for banks, and it's why they're so eager to offer you new credit cards. Every time you use an ATM that's not your bank or make a payment with your card, banks can collect fees. These charges may seem minor, but they're a steady stream of income. Even merchant transaction fees paid by businesses every time you swipe your card contribute to the bank's bottom line. Banks also offer investment services, helping customers buy stocks, bonds, and mutual funds. For these services, banks charge commissions and management fees. This adds yet another layer of profit as banks earn money not just from lending but also from helping you invest. If you've ever traveled abroad or sent money overseas, you've probably noticed foreign exchange fees. Banks make money by charging a small percentage on currency exchanges, and with millions of transactions happening daily, these small fees become a significant source of revenue. Every time you pay with your card at a store, the merchant pays a small fee to the bank. This fee might seem invisible to you, but it's a key part of the bank's income. With millions of card transactions every day, these fees add up to billions over time. Here, where it gets even more interesting, the same dollar can be used to support multiple loans as it moves through the banking system. When you deposit money, it's lent out, spent, and redeposited over and over. This cycle helps banks generate even more income from the same original deposit. Despite all these profit-making strategies, banks play a crucial role in the economy. They help people borrow money to buy homes, start businesses, and make important purchases. Without banks, it would be much harder for individuals and companies to access the funds they need to grow and thrive. It's easy to feel frustrated when you see how much money banks make from your deposits. But are banks evil? Not really. They provide essential services that keep the economy running smoothly. The key is to understand how they operate so you can make informed decisions about your own finances. Knowing how banks make money empowers you to make smarter choices. You might look for accounts with lower fees, higher interest rates, or better rewards. By understanding the system, you can avoid unnecessary charges and make your money work harder for you. Instead of just letting your money sit in a savings account, consider other ways to make it grow. Explore investments, start a side business, or look for opportunities that offer better returns. The goal is to make your money work for you, not just for the bank. Understanding how banks operate is a key part of financial education. The more you know, the better equipped you are to manage your money, avoid costly mistakes, and build wealth over time. Take the time to learn about banking, investing, and personal finance. It pays off in the long run. To sum up, banks make money in many ways by lending out your deposits, charging fees, and offering financial services. The system is designed to generate profit, but it also provides valuable services to individuals and businesses. By understanding this, you can take control of your financial future. The lesson is simple: don't just let your money work for the bank. Take charge of your finances, seek out better opportunities, and make informed decisions. With the right knowledge, you can turn the tables and let your money work for you, building a brighter financial future.